Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I am your stock miner, Brian Johnson. Quick update video for you guys. We saw a big move to the downside yesterday, breaking the streak of consecutive days without a 1% pullback day since I don't know when. Yeah, it was like some new record or something. I shouldn't say that. It wasn't a new record, but it was like 10th or 12th or 13th on the list of longest running streaks without a day of 1% or more pullback. So we broke that yesterday, and today we pushed a little bit back to the upside. To be expected. This is very, very common. Where the markets consolidate after a big push to the downside, kind of regain a little bit of ground, especially since we've been so bullish lately. Not a big surprise that some people are coming into the markets thinking, wow, big pullback, good buying opportunity, and that's what they're doing right now, is kind of buying it up. So what we've seen is this huge channel that we were following for quite a while, all the way back to about the beginning of mid-February here, was broken. It's reclaimed. The bulls were able to get it back up and in there, but you can see it coming into this overhead resistance area at the 200 period moving average. This pullback that we've seen is more than enough to qualify for what then could be another little push to the downside, depending on where we are, or if you will, in the Elliott wave count. But by my estimations, we saw a very decent push to the upside. It is due for a little bit of a pullback, but I wouldn't be surprised at all to see even maybe a little bit more, kind of down and then back up again. If we don't, the numbers you're looking for are breaks back below these areas here. I still like the 12,750 and the 12,650 areas. Should be keeping your eye on those, watching those very closely as we push into tomorrow's trading. If we move on to the daily, I'll show you this here too. You can see this major blue line coming up and through here. I won't go back and show you exactly where that's coming from, but this would be a major line of support at this point. What's really needs to be noted is the break of the 20-day moving average. We had been pounding our way against it here on the Dow for quite a while before we finally busted to the downside yesterday, closed below it. This makes a second consecutive close. If we push to the upside, this is what you're going to be watching with great interest. That is the 20-day moving average on a back test. How will that handle it? Will price be able to stay contained below there as we get into that area? I'm not really looking at anything long, to be quite honest, at this point. I'm not sold on that. I do believe that we could see a little bit more downwards action before this is all over with, so I am playing my cards carefully. Above 13,000, okay, you might get me to dip my toe in the water there to the long side again and see if we can't pull a little bit more out of it as the bulls continue their charge, but still got to be very conscious of this 20-day moving average on any further push to the upside. As for the downside, you have the 50. We are now buried between the 20 and the 50, and this is where we're stuck, looking for holds of the 20 and or holds of the 50 to give us our next overall, I think, direction. Breaks back below this could mean some further selling pressure. 12.5, 12.450, easily within reach, I think, at that point. So you can see where we're in kind of a crucial little area. Also, if we draw a line across here, make it imaginary, you will see that we have kind of a left shoulder with a head and now potentially that right shoulder forming, which works beautifully if it does come up and into this 20-day area and then rolls back over to the downside. That would make a very nice head and shoulders pattern, leaving us with a lower target of still somewhere down here in the 12.4, 12.5 type area. Once again, back to the blue line being a major area to be watching. The NASDAQ broke this line. We've been watching this since the 13th of February, even deeper than that. I could pull that back. Beginning to middle of February, this line has held so nicely. Can't beat it, gap it. Did exactly that, and now on a retest, it has held and held very nicely. So a beautiful look by the bears for the meantime as it held this previous, what was support, now holding as beautiful resistance. Looking as well for this to maybe pull back a little bit further here. We could see it come back up, but the more important thing for you to note is this blue line. Watch this closely. See if this thing won't hold over the next few days. If there is any further push to the upside, and then fall back around to the downside. On the way back down, you're watching the 200 period moving average followed by that 2550 area. 2550 being a major player at this point on the NASDAQ chart. That'll come right back below the 20-day moving average, which all of the other indices have now broke. The NASDAQ is the last remaining monster, go figure, very common, that has not been able to break below and stay below its 20-day moving average. So on any further weakness in the markets, that is your level to be watching with great interest on the NASDAQ side of things. Watching for that break below there, then watching that 2550 area. If it does hold there, it will start to set up a very nice little kind of head and shoulders type pattern as well. From a weekly perspective, I'm going to give it a couple of days, but you can see what we've seen, nothing but straight up action on the NASDAQ. Just very strong. Go figure. The techs have been great. Apple's been crazy. Just a monster lately. So no reason to think that this NASDAQ couldn't continue a little bit higher, but more important, let's watch where this thing closes. If it keeps up in this area by the time Friday's done, or maybe even hammers out, we could see a high base put in here, which would only lend itself to more buying. Maybe not next week. We might get one more week of that, but eventually more upwards pressure for the bulls if it'll stay sideways. So very important to watch the close on Friday from a weekly perspective. Here's the SPX breaking this blue line. Huge move to the downside. After that break, you can see the selling really come pouring in. Broke the 1350. 1350 was huge. Not only did we break it, but we closed above it, only to see the bulls say, oh no, not yet, and close back above it. That is a major area for the bulls. They know it, the markets know it, and they're doing their best to try to hold on to it. If it'll continue its push to the upside, you're watching closely the 1360 to 1365 range for your next major overhead resistance. To the downside, back below that 1350 and or the 1330 area is where you want to be watching on the SPX going forward, as it is also trapped between its 20 and its 50 following the Dow, and setting up what could be a left shoulder head, maybe a right shoulder forms. We roll back over, a little early to tell, but I want to throw that out there. Make sure you guys are looking at that kind of stuff and recognizing that kind of stuff. I really like what I saw yesterday. Today, the volume internals, not too bad. The bulls weren't too bad. But I am going to be watching once again retests of the 20-day if there is any further push to the upside. This is my mark going forward for the bulls. This is what they need to retake. This will be very important that they retake that line over the next couple days. Any further stops or pauses or breaks below this line, I just think it lends itself to more selling, as it would then roll over and head down towards, I would have to say, the 1300 mark. I'm loving the 1300 mark. Beyond that, 1280 and 1290 are also extremely good, extremely strong areas of support. But this 13 to 1310 area, just really just a really nice looking pattern if it does develop that way. The VIX on a daily back down today from its 21 point yesterday, so huge move to the upside, decent move back down. It is still stuck between the 15 and 20 point area, which for me is still more complacency. Sustained, consistent closes above 20 are when I think the fear starts to kind of re-enter the market, and that will be of course, great concern for the bulls at that point. So watching this VIX very closely, as you've seen since the beginning of the year, a very low, sustained, complacent market for all intents and purposes. And no real major volatility yet, much to the chagrin of a lot of options traders who love the volatility to make money. FAS 60-minute, this one popped. Look at how just a beautiful, I've had this, I don't know how long I've had that line in, but a beautiful stop yesterday. Not only hit the line, broke below it, came back to close above it, basically pretty close to a hammer, kind of hammered out on it. And then today, a nice shot back to the upside as it reclaimed 3.5%. Notice that it's still only about half of what it needs to take back to reclaim what it lost yesterday. a huge move down. This also looks very, very three-ish in my book. If you're an Elliott wave person, you know exactly what I'm talking about. So this bounce here could be a 4. That's why I'm looking for maybe a drop and then another move up, or it's done what it needs to do. It could drop straight down from here. On the FAS, though, 86. Keep your eye on that for your next shorting opportunity there in FAS. To the long side, I'm not going to recommend one at this point. Watching the 20-day moving average. So this will be the areas to, of course, take back. On any drop to the downside below that 86, it's definitely the 200. The 200, the 50, the blue, they're all stacking up in the same place. But boy, what a beautiful place to see a drop and a great place to take some profits. So if you can get in below that 86 mark, I wouldn't say, I'd probably tell you to take a shot on that one. That's what I'll be looking at with 83.50 is probably your first target there. Here was the FAZ then, as you saw, the huge move up and out of there, only to come all the way back down and retest this line. I could perfect this line, kind of shape it up a little bit, but it's at on around this particular line. Once again showing us that it's done as much as it needs to from a bear standpoint. And looking for hopefully another pop to the upside over the next few days. Really love what FAZ and TZA, for those of you that play that, have been showing us the last few months. This is just a beautiful formation right here. I love, love, love these wedge type formations. They usually end up paying off very, very well. So we're watching for that next bigger break. Over 27 is your area. If we can get back up and above, notice how we held the 20-day moving average here on FAZ today. Okay, so looking for that push back to the upside. Definitely then targeting the 50-day moving average. It's what all the markets are doing. It's all the rage. Why would this one want to be left out? It's going to be a loser if it doesn't do it. Break the 20, hold, visit the 50. Some of the indices have already done it. I'm waiting for the other indices to see if we get some confirmation on them doing it as well. And if we do, game on for the bears at that point. So the bears should be able to drag the indices down, pushing these bear ETFs to the upside, making everybody a little bit of money on the pullback standpoint. We'll be watching closely for when and if this may be done, and then look to maybe reload on the long plays and make a little bit more money to the long side. Till then, guys, I'll let you go. If you like these videos, I do them every day except for Saturday. 28 bucks a month, buck a day, not a bad deal. You're not obligated to stay in it any longer than a month if you don't want to. Try it out for a month, see what you think. I also have the mentoring program, which is starting to really get into high gear. If you're tired of losing money and you're just tired of not being able to figure out exactly how to identify patterns or when to get in or when to get out, I can't tell you how important that is to your trading. So if you really want to make that work, that's exactly what you want to look into then. Talk to me about that mentoring program. It'll help clean up a lot of missing puzzle pieces for you and your trading. The other step is I do a managed fund as well. If you want me to look after your funds for you, talk to me about that. There is a minimum to get into that, but we can talk about that. Send me an email. Give me a call. We'll talk about those as well. If not, we'll see you again at a later date. I'll try to do a weekend wrap-up for you if I get a chance. And if I don't see you then, I will definitely see you next week. All right, guys, take it easy. Talk to you soon. Bye.